everybody. Glad y'all could make it out today. It's going to be a good day. Today we're going to be learning how to draw trend lines, and we're going to set up the charts, and we're going to learn how to see easy to see divergence. So anyway, I first want to ask, does everybody hear me and see my chart? If you could put a yes in there, it would be great. Where do I get that now? In here. Here we go. Okay, got lots of yeses. Good day, John. Good afternoon, Dale, and Gerald, and Jesse. Hello, hello. We're ready to do the show. Okay, so we're just going to wait another few minutes here, okay, guys, ladies and gentlemen, to see if we get a few more people pop in here before we start. Just going to wait a few more minutes, or a minute or so. Another minute. There's always a few people that are just a little late. Hope everybody's doing good today. We had a really good trading week this week. That's for sure. Yeah, nice colors on the Osma. I'm going to tell you all about the reason for those different colors. Something to do with losing strength and gaining strength. Indeed, yes indeed. Okay, so we're going to start now. I believe everybody's come that's going to come, I guess. Maybe a few more will creep in a little later. I'm just going to reduce the screen here a little bit first. First, I'd like to, before we go set up the charts, first I'd like to just briefly show what happened this week, even though I already sent you guys pictures, but you can see the setup right here with my mouse here. You got the 3 bullish candles, and you would have put a sell order right there, and down it went. That was a nice winner. You could also use the Fibonacci to draw it, and it pretty much happened around the same area. Okay, you'd take it from this high. That first trade I showed you there was the trade line pullback, and you drew the Fibonacci, okay, down like this to our low. You got that retracement and bullish candle. As you can see, where did it bounce off of, ladies and gentlemen? Yes, that most important level, the 38.2. Remember our 3 important levels, okay? So it definitely hit target 1 and target 2, okay? As you guys can see. Now let's remove that again, and we'll draw it once more. But also here, it's pretty much, I know it's pretty much the same setups, but as you know, both the trade line and the Fibonacci, but you can still put your Fibonacci on there to get a much more accurate, entry. Okay, so because we drew it, from here to here, now we would the next one we'd draw would be from there to there. Okay, and as you can see, what did it do? It basically came up to the 61.8 right there and shot down like a submarine down to the bottom of the sea. Okay, and it went right to your targets. Okay, so that was the second trade with the Fibonacci. Okay, now let's go and look at the third one. Okay, and the third one was drawing it from this lower high. Okay, to first we drew it to here and it didn't go anywhere. Then we drew it to there and it still didn't go anywhere. Then we drew it to this low. Okay, then it started to retrace. So where did it go to this time? It went exactly right here and kissed the 61.8. So you got to be like, I don't know. When I first discovered this about a year and a half ago, and I started drawing my Fibonacci from all these, lower lows and lower highs when we're looking to sell, and from our higher highs to our higher lows when we're looking to buy. When I first started drawing this and seeing how they were buying and selling off these three levels, like to the pip, it was just like, it blew my mind. And I don't know if you guys are like blown away here right now from what I'm showing you, but I didn't make this up. This isn't some, hokey pokey junk that someone's trying to, teach you. I'm teaching you some really good entry stuff here. And as you can see, we had three magnificent entries. Run right here at the 38.2. This one here was the 61, and again at the 61.8, and all three of them hit target one, or no, this one didn't hit target two, okay, but the other two hit target one and target two. So anyway, if you would have got in on this one and you were brave and you sold it right there at the 61.8, you made 76 pips to target one. Okay, and anyway, and when we remove this, okay, you also have your three, four bullish candles right here. So you would have sold right in here as a trade line pullback. You would have sold right there. You would have, you would have had about a 40 pip stop, and it definitely did hit your 40 pips here. Okay. Then I just want to quickly show you what happened when the trend changed. Okay, the trend did not really change here, you see, because this bullish candle didn't take out this, this area here, this problem area of all these wicks. So it did not change the trend, and that's why we were still looking to sell here. I just wanted to say that to you. But right here, as you can see, this big bullish engulfing candle, not only did it take out our ceiling right here, but it took out this level as well. So that told us right there on that candle that we went from a bearish week, bearish trend this week to a bullish. So anyway, just to quickly show you here what went on with this one, we draw it from here to here, okay? Come on, cooperate. There we go. So anyway, as you can see, there was no trade set up here because price did not come down to the 38.2. Remember that at minimum, it has to come to the 38.2 or the 50 or the 61. Okay, if it only comes to the 23.6, there's no setup. Okay, but as you can see, there was a very minimal retracement here, and they bought it to the pip off the 23.6, and it went right up to target 2. Okay, so anyway, I just wanted to cover, those trades with you guys, just because it all involves what I taught you last Saturday, okay? And you guys had some very nice trading opportunities here. So anyway, let's see. Does anybody have any questions about that? Let's see. When the floor or the ceiling is broken, the entry should be done right, or should the candle close first? Well, it says it in those two videos. There's two ways to do it. I'm not going to repeat that today because we got to move on here and with the next part of this. But it tells you the aggressive entry and the conservative entry. So if you're not sure on that, just go back after today and watch that lesson. Okay, Nancy? Okay, thanks. But anyway, so we're going to move on now, and what we're going to do is we're going to set up the charts. See, like I said, there's another question here. Like I said, we got to move on here. It's all in the last video, Gerald. Anyway, so we need to set up these charts here, and in the members area, the tools should be there. But I don't know, like my IT guy just loaded them in there. So they should be in there, so you should be able to go and get them. there's just a few different indicators here. I'll show you. Let me put the chart back down. You're going to have one indicator. Hold on. You're going to have, let's see, the OSMA. You're going to have the pivot points, okay, which you basically already have. Probably I gave those away as a gift during the launch of this mentoring, okay. And we have the whole numbers indicator that shows in between. It shows 129, 129.50. You know, we only use those on the 15-minute time frame. Okay. So, is anybody? I just want to ask: can someone log in there right now and go and see if you can get all your indicators? Yeah, Jesse, it should be in the members area right now. So I'd like everybody to go into the members area and see if they're there. If they're not there, they're not there. You're sure they're not there? Okay, well, I'm just going to pause this for a moment, okay? And I'm going to have to send them to you by email. So just let me pause this for a moment here. One sec. Okay, so anyway, I just sent them all to you by email. You don't really need them right now anyway, because you're all looking at my screen anyway. And anyway, Dale, the manual's not going to be there till next week, okay? And there's a reason for that. Is because I want to slowly teach all of you, okay, the easiest part of Divergence first to the medium, part that's not, a little bit harder, and the most difficult part, which is at the end. So I don't want you to go and look throughout the whole manual until I teach it all to you. So it won't be there until next week, okay? It doesn't matter what your broker has, Bob, okay? It's all good. But anyway, right now we're just looking at my screen. Okay, so anyway, like I said, you don't need the indicators right at this moment anyway, but you're going to get them all sent to you. And they will be in the members area real soon as well. Okay, so first, what we're looking at here, okay, I'm going to remove this box here. Okay, so what you're looking at here is basically my charts that I use on a 15-minute time frame to look for divergence, okay? But anyway, like I said, it just has these few indicators in here that show the spread, they show the price, okay, the current price in a bigger number, because it's so small to look at it over here, this little price line. We have the OSMA, okay, the pivot points, and the whole numbers. And that's pretty much it. And you guys can get all that later, okay? So anyway, we're going to go back now. We're going to go look at the 1 hour charts, okay? Actually, we'll look at the 4 hour charts. So basically what we're first going to learn here, now that we, basically have the charts set up, but you guys don't have it yet, but you will. You don't need to set them up at this moment. But anyway, what we're going to learn here to do now first is to draw trend lines, okay? And to properly draw trend lines, you got to know where to draw them from, okay? And there's two kinds of trend lines that I use, okay? And I call them major trend lines and minor trend lines, okay? So when, let me just... This is actually the size here that I like to look at my charts. Okay, when you guys load the template onto your charts, this is the exact size you'll be looking at. Okay, if you spread it out and make it bigger, in my opinion, doesn't mean it's going to be the same for you, but I find it harder to find and see the divergence when the charts are bigger. And this is why I've found that this perfect size right here, okay, is the ideal size to look for divergence, because it squishes the candles a bit closer together, and it makes you be able to look farther back in the past, so you can draw better trend lines and see where all the divergence occurred. Okay. So anyway, in a downtrend, okay, you're always going to take. Let's start over here actually. Okay, right from here we'll start. In an uptrend, okay, you're always going to take your trend line and always draw it from underneath the candles, okay, like this, okay, and in order to make a trend line, effective, you need to find 2 points, okay, where you're going to draw them from. You're first going to start from the low when in an uptrend, and you're going to find your second point, which is right there, okay? As you can see, it almost came up to this trend line here and here, missed it, and bounced off of it by about 17 pips here, and about 40 pips there. There's people who cheat, okay, I guess you could say, and they readjust their trend lines, okay? Let me click on that. So they would go and move their trend line like this, okay? So, it looks like more so that it bounced off of it more accurately, doesn't it? Well, this sometimes when you do this kind of cheating and you keep adjusting your trend line, it can cause you to do wrong trades, okay? Because if you're always moving it in and attaching it to the nearest candles, you're gonna get entries that may have not occurred if you didn't do that, okay? So anyway, so if you just keep it like this and you draw it out, okay, like that, the way it was, intended from this very low, it didn't even come back to the trend line. It almost did, but it didn't, okay? So anyway, that would be your major trend line right there, okay? And then within that, okay, you'll have what we call minor trend lines, where you can draw trend lines like this, okay? There's one minor trend line, okay, which it didn't break that either, and it never broke the major trend line, okay? I'm not going to draw a whole bunch of lines on here and try and confuse you. I only use like one or two for a trend. I only use like one or two trend lines at a time. I know there's people, they'll start drawing channels and they'll draw like 20 trend lines on your chart, and all that's going to do is clutter up the chart like a bunch of indicators does and confuse you, okay? So you don't want to do that. So when the trend kind of like changed right here, okay, it didn't change, but it went rapidly up, this is where you draw. You take it from this one now, you see, and you draw it right up like that, okay? So as you can see, it did break this trend line right in here, okay? But what they did at that point in time is they went up, they took it up, and whoever went short in here, they went and got the stop. And that's why you wouldn't go short here right there, because you're looking for divergence. So anyway, this is your major trend line. This is your minor trend line, okay? So let's just erase those for now so that it doesn't clutter up all the charts here. So we'll move to the next trend now, okay, which it changed, as we all know, it changed trend right here, okay? So from looking at that before. So if we take a trend line and we draw it down like this, okay? So look what happened here, okay? You had a fake out right here. Sometimes it doesn't like to draw it on all these past candles. But anyway, right here, okay, right here, it went through it, came back down, created these wicks. So there was, it didn't really break it there. Here, it did break it. It did like close above it, but only by a few pips, as you can see. Um, it's only like about 20 pips or 13 pips. Okay, but it created the long wick. Okay, so anyway, that was that trend there. Okay, and if you go and adjust it and bring it like this, okay, well, it broke it again here. You don't want to. That's why I was saying, like, you gotta like really like go, okay, where am I going to draw this from, right? Because your first point, second point of origin was right here, okay? Like I said, you always take it from the swing high or the swing low to draw your major trend line, okay, like this. So if you adjusted it and put it over here, well, it didn't even go near the trend line. And if you kept pulling it down as time went on, okay, it finally did break it here, but it didn't go anywhere. They faked people out on this one, and they took out the stops, as you can see. So anyway, that's your major trend line right there. Within there, okay, you have a minor trend line, which would be from here. Okay, so right there would have been your minor trend line. And there was divergence right here, okay? There was. So if you did do a trade in here, okay, if you were to do a trade in here, what they did is they came down and they got the stops again, just like they did every time that the trend changed a little bit and people started buying, they came and got the stops. People started buying in here, they came and got the stops. People started buying in here, they came and got the stops. And again, right in here, they really made it look like they were going to change direction, and they shot it down. And what did they do? They came and got the stops again. As I told you, this game is a dirty, dirty game. Okay, and they just keep coming and getting people stopped. So that's why I find the reason why we use these trend lines, because this is going to be our entries. Okay, once we see the divergence, then we're going to use the trend lines, the break of these trend lines, to get into our trades. Also, I'm going to show you, a more advanced way of getting in even earlier, that we use the OSMA to do it, okay? But anyway, that's how you draw your trend line. So you basically, in an uptrend, you're taking it from the swing low all the way up, okay? And that's your major trend line, and within that major trend line, there's always going to be some minor trends, okay? Just like right in here as well, there was, you would have drawn another trend line in here, another trend line down here, okay? There's 1, 2, 3 minor trends right here in this downtrend, okay? Let's see, does anybody have any questions? Let's see. Pause showing smooth freezing. It is. Can people see my screen or no? Um, the moves are freezing. Everybody sees the screen perfect. Okay. Okay. But you say some of the moves are freezing? Everything's okay. Everything's okay. Okay. I thought there wasn't. Okay, so does anybody have any questions on how you draw major trend lines and minor trend lines? You could not see high to low trend line. Well, here's the high. You cannot see that right there, Dale? The camera cut off. Hmm. Yeah, you need experience to draw them, but once you start drawing them, how I said, Richard, you just got to practice a little bit. Okay, you take it from the swing high right down. You find your second point where you want to draw them to. Okay, and there's little minor trend lines in between that you also take from the swing highs or the swing lows, depending on what you're trading. Um, but I don't see how it's cutting off the top of the screen because it should be showing the whole screen. Um, 1600. What do you mean 1600? What's the point of drawing minor trend lines? Because you can take trades within those minor trend lines. Like, let me show you right here, okay? There was divergence right here. Okay, here, let me remove this so it's out of your way. Okay? And right from here. Okay, there's divergence. So you would have got long right there. Okay? And your stop would have been 46 pips, and they would have come down and got your stop. But if you had your stop bigger, okay, like I told you guys, if you want to do this aggressively, okay, you can use 20 to 40 pip stops, okay? So if you use the 20 pip stop on this past here to 60, you never would have got stopped out, and it would have went up 80 pips. Do you see that, Gerald? Right here. Okay, great. That's the point of the minor trend lines. We have major trend lines where it does a major trend line break, and we have minor ones like in here, okay? Like right there. Here's another one right there, down to right there. There's your three minor trend lines in this downward trend. Okay. I already said that, Philip. How do you do the second point? You find the next point. Okay, like right here. You take it from the swing low. Right there is your point. Right there. Okay. Sometimes you have to adjust it. So this would have been your point right here. Okay. But then it kind of changed trends. So you'd kind of just, you'd want to find where it touched a lot. That's where you'd put it. Sometimes you have to readjust them, Philip. How soon after you draw the trend line? If after the second swing high? It's not subjective. You're using these for your entries, okay, Philip? It's not subjective. It just takes a little time to practice them. That's what I'm saying. Like the first part of this course, okay, that I taught you guys is real easy and simple to do, and this part is a lot more complicated. This is the bonus of the course, okay? So if you really want to learn this stuff, you gotta continue drawing trend lines, practicing drawing trend lines, and you're going to be practicing drawing lines in your chart because you're going to be looking for divergence. Okay, so this is what it's all about. It's not going to be come to you like real simple and easy, like you know like all these traders want dots and arrows on their chart. Those things don't work. So you got to put a little time in this to find and draw these trend lines because this is what professional traders are looking at. They're drawing these trend lines. They don't use dots and arrows on their chart. Okay, they use support and resistance. They use trend lines. Some of them trade divergence. Some of them don't. So Cynthia says that they run 30 degrees. Okay, well, I don't know how to measure it in degrees, but yeah, you're probably right. That probably is 30 degrees. Sometimes, when a trend happens really quick, like over here, okay, it was so steep and so quick, you can't even really draw a trend line on it. So you just got to go, you just got to pass on it. You know what I mean? But you're going to see, these trend lines happen. Let me get rid of these. Hold on, let me just put the template on real quick. Where is that? Where is that? Triple D white. Okay. So let's go to the 15-minute. Where did I see that nice trend? Or was it? Oh, I don't know where that one was now. Maybe it was on a 5-minute. I don't usually look on 5 minutes, but sometimes you do. You have to. Oh no, it's bouncing all over the place. Hold on, scrolling through here to today. Yeah, there's always a trend, that it's just going to break it, like right here. Okay, so you draw this trend line here. Okay, where did it break it? It broke it right there, but it really broke it here. So you gotta just find the places to draw these trend lines. So here's one up here, but you're not going to draw one like that because that's like drawing a channel. But you're drawing them from the bottom. When it's going in an uptrend, you're drawing it from the swing low to the next point. Okay, right there. And up it goes. And when it's going down, same thing. You'll take it from the top, right down like that. Okay? You would disclude this wick because these two right here are close enough to draw it to. If you drew it way out like this, well, that doesn't make any sense. It's not going to go way out there again, is it? It's better to bring it like to there, like that. Okay? Then with inside there, here's another trend, okay, right there like that. And then once this trend changes again and keeps coming down, okay, you can even take them and draw it from this high here down, okay, like this. Okay? There's always a little trend, and they're always buying and selling off these trend lines. This is what they're doing. So let's see. What else do we have here? How many pairs have you found it workable to monitor when looking for setups? I only trade the euro, okay, but I look at the euro and the pound, and I look at the Australian dollar and the Swiss franc. But I don't look at all these cross pairs like the Australian CAD or the New Zealand Singapore or whatever. I don't trade that stuff. Like you're looking for trouble when you trade that kind of stuff, if you ask me, because they don't make sense to me. Like, take the euro pound, for example, okay? The pound and the euro could be dropping like hotcakes from the sky or meteorites from the sky, okay? And the euro pound will shoot up. Does that make sense to you? Doesn't make sense to me. Okay, so anyway, that's why I don't trade those pairs. And anyway, what does Cynthia say here? Right-click on the bar that holds your Fibbo horizontal line, trend line. Then you can add the degree trend line. Oh, okay. Well, I don't use that, but anyway, thanks anyway. So anyway, does everybody understand how you draw these trend lines now? Do I need to draw some more? Go back to the 4-hour. Everybody understands them? Put a yes if everybody understands them. So I guess that would be pretty much it for this part. Yeah, it's not that hard. It just takes a little bit of practice, So just remember that when it's in an uptrend, you're drawing the major trend line from the swing low to your first, second point and extend them out, okay? And there's little minor trends in between. I know I'm repeating myself, but I just want to say it once again. When the trend has changed and it's going in a downtrend, You're going to take it from the swing high down, right, and find your second point where you draw it to, and then extend it down. And you're going to find little miniature trends within minor trend lines, which are trends within that downtrend. Okay, so that's pretty much it for trend lines. I guess we could take a little break here for about 5 or 10 minutes, and then we'll start looking at easy to see divergence. Okay, so everybody go and take a little break, and we'll come back.